Hi there, traders. This is Brad Gilbert. Now, I want to give you a plan for the week ahead, right? Instead of the daily market insight, sort of focus across where the attention is going to be this week. Focus on the raw nerves so you can really start to piece together the best trading opportunities. Right now, start of the week, once again, just having a look here at what the key theme is, right? The dollar higher on safety bid as data spurs growth worries. Now, you would have seen Friday, the Nikkei, the Australian equity markets, actually equity markets sort of globally are sort of slowly drifting. Now, all these central banks talking about raising interest rates, obviously is going to put pressure on the equity markets, right? Naturally. But what we're seeing is a lot bigger stories around global growth, whether these are articles or news articles that are spooking the market, but they are sort of sending sort of a little bit of a ripple effect across the global markets as they prepare for sort of potentially higher rates in the US and definitely higher rates across Europe, Australia, Canada, New Zealand, etc. Right. And the situation is, and this is where like things are really coming back to home, because the data in Japan is starting to impact, right? When that comes into play, you know, it's game on. Now, if I look at the global markets page here, and there's a couple of things that just stand out to me. And this is what you should be doing when you look at, say, a page like this. There's a lot of numbers here, may not make sense to a lot of people. Now, week to date, like the equity markets, as you can see, have been getting a little bit touched up. And this could be even more. Now, the other side of it is the yen crosses down the bottom here, okay, the carry trade, right? Interest rate differentials, higher rates in Australia, New Zealand, Canada, or even the Swiss rates, right? The expected higher rates in Europe, UK, New Zealand. So the carry trade is alive and well, right? So you should see all the yen crosses higher. If you check your charts, you'll see them all moving topside. If anything, the Aussie's the one that's sort of just lagging, but that does create opportunities in that instrument as well. Now, starting the week, okay, so you're going to draw a line through last Friday's trading, say through Saturday, right? You had the Asian equity markets getting hit. The Europeans got hit as well. But what have we got at the start of this week? Well, the US equity futures, and it's not unusual to see a bit of a rebound from Friday's close. If it goes too far, right, liquidity on Friday diminishes and everyone scrambles to get out of their positions, and you see a big stretch in say the equity markets or a lot of these instruments. So we are seeing the equity futures in the US up, and that's giving us a bit of a risk on profile. Okay, Euro, Sterling, Aussie, Kiwi up, and the dollar pairs down. Now, that's good for us, right? Because it gives us some uniform behavior in the markets to work with. Okay, so then we can start to piece together where the good trading opportunities are. And if I just come across to the charts, and I'll show you the data we've got coming up. It's the last week of the month. It can get a little bit loose, but I'll tell you what, this month we've got a huge amount of stuff coming out. So on the global markets, the dollar index, yeah, it's a little bit higher, right? We're seeing the technical aspect of the market behaving extremely well. And you've got to get confidence from this. Look at this snap here in Euro, where Euro drifted lower. Now, we're starting to see, like the ECB's just raised rates. They're talking about higher rates. Friday, and I'll show you the data in a second, we're starting to see some of the business numbers come through from a lot of these countries, and the data's falling, right? Inflation's going up and business activity and everything else is falling. This is a really tricky situation for the central banks, and that's for them to deal with. We can come back and sort of cherry pick the best trading opportunities, but just focusing on the charts here at the moment, like technically they are trading very well. That was a clean snap through that trend line there on Euro. You're seeing sort of similar price or activity. I was saying all last week, gold, right, should be down towards 1900. I think it got down to 1910. And don't get me wrong, this is not an easy trade, right? Liquidity, spreads, everything's very tough on gold, but you can generally see what's happening. We did see the snap down here in oil, down through that bottom trend line, back up to sort of mid-range-ish. Now, this is the tricky part. Let me just actually come over to the equity markets because it warrants a bit more detail here. So if I come over to global equities, right, and just have a look here. So the Dow Jones Mini lower, the S&P sort of drifting. You got that big sort of decent move down in the Nikkei. The Australian All Ordinaries hammered. the FTSE lower, stocks lower, and the DAX lower, right? Now, if I tell you what, I reckon the global equity markets are being held up by this big AI push, right? You know, everyone's jumping up and down about, you know, you say chat GDP, all this other stuff. But if I tell you what, if the NASDAQ starts to fall, it's going to be, I think we're going to see a bit of a global meltdown. And I know it's sort of like catastrophic, but a massive clean out to the downside. We are already starting to see it here on the Nikkei, the All Ords, FTSE. I mean, we're getting higher rates from central banks, right? So you'd expect all the equity markets to go lower. The thing I'm trying to highlight here is I think we're starting, like NASDAQ has been the most outperformed equity indice, right? And to me, a lot of the stuff I've been reading over the last number of months, it's all about, yeah, the great earnings that this AI is going to bring, and there's a huge amount of investment in it. Tell you what, if everything global growth falls off, well, then that's not going to do much for the AI sort of piece. And you could see the NASDAQ sort of get back down towards 12,000. What's that going to do for global equities? They're going to get absolutely pummeled. And this could coincide with the central banks raising interest rates, right? All it would take is the Fed to raise once or maybe twice, and these things are rocking and rolling. Just looking at the yen crosses. Okay, let me just get off that green pen. Very hard to see. All moving topside, right? As I was saying, the Aussie's lagging. It's got global growth issues and all sorts of things going on there. A little bit different to the euro, sterling, and CAD yen, right? So we have got the carry trade, right? Purely interest rate differentials between, say, Europe, sterling, Canada, Australia, New Zealand against the yen. The yen's had minus 0.1 interest rates for like, what, 30 years? So that is in play. And now if I come back to the currency markets, this is where you sort of need to sort of come back into play and sort of really piece together where the sort of key opportunities are, because we are seeing some good, you've got to be very patient, right? Like, as I was saying, that move down here in euro was like a clean snap. The picture here on sterling is not as clear. Aussie got absolutely touched up, and the Kiwis following the Aussie, right? And then you look at the price action here around dollar CAD, sort of chopping around trend lines. Oil sort of falling is was putting upward pressure on dollar CAD, as we saw. And then, dollar yen just cruising topside. The dollar is sort of attributed to coming back, you know, with all the global growth issues out there. That's what we're seeing on the dollar. And dollar Swiss, well, a bit of a clean out through those through that trend line, and then it's basically coming back to sort of mid-range again, right? And I was sort of saying this on Thursday/Friday, when you start to see whether we're sort of waiting for the key data, right? You get a bit of a clean out to the downside or top side on these instruments, and they end up closing back in the middle of the range. It's just like cleaning out stale positions as traders sort of chase the market looking for the key releases. Now, this is where we need to come back and really focus on where the attention is, right? And focus on the key data. Now, I've got this set to impact or low impact, so we'll see all the data here, but I'll sort of just take you through where I see the major events. Now, Monday, the IFO business numbers, okay, these are a well-respected European number for years, right? From the time I worked in London in the 90s, the IFO numbers and the zoo numbers, for that matter, were always well-respected. So keep an eye on that. But just coming back to, so let me just come back to this main page just for a second, because what I want you to see is this is where things really come into play. And I'm talking about global markets really coming right back into the forefront. I can just scroll back down here, and it's starting with Japan. When Japan's economic numbers and the CPI numbers came out a little bit better than the forecasts, then that created an issue on the Nikkei. That starts to have a flow-on effect. So I can tell you what, if there's an increased inflation in Japan, which is generally neutral to zero to negative, that is a telltale sign that things are not right. If global growth is going to be impacted and inflation's going up, it's a recipe for basically higher interest rates and lower growth, stagflation, deflation, whatever you want to call it. This is going to be a bit of a mess. But the fact is the sleeping giant, which is Japan, if that's waking up, and it is, well, then I'll tell you what, we're going to have good trading markets across Asia, Europe, and North America. And you're going to see a lot more activity around these numbers. Okay, so so as we come into this week's data, let me just come back to this. So Japan, and I don't say this like, it's like very extremely rarely, the Japanese numbers will be in play, okay, especially for those traders trading the Nikkei or the yen crosses, potentially. Like the whole carry trade is a bigger thing than this, but keep an eye on that. The IFO business numbers, worth a look, right? Now, I don't know what they're doing with these manufacturing sales numbers out of Canada, but they're getting the dates wrong. Now, it's the last week of the month, right? You usually see a huge amount of central bankers trying to keep the markets on track. We've got Christine Lagarde speaking there on Tuesday, okay, and Panetta out of the ECB. But when you come into Tuesday's trading, I mean, it's got to be all about the Canadian inflation numbers, okay? Bank of Canada governor there, Kaziki speaking as well. So inflation numbers, I mean, there's pressure on the whole Canadian economy. If these numbers, the consensus numbers, the expected numbers for inflation, if they come out stronger, well, I'll tell you what, it's going to lead directly to higher interest rates in Canada, and we're going to get that flow-on effect through dollar CAD and the CAD crosses. And I tell you what, it's a telltale sign for the rest of the central banks around what's going on. Now, from Tuesday onwards, so we've got the Canadian inflation numbers, you've got US durable goods, some of the housing number, and the S&P Case-Shiller home price numbers. These are all solid numbers, okay? So once again, we're going to have direction here from the Canadian inflation numbers, at the same time, durable goods. Now, that makes it a little bit tricky that the S&P Case-Shiller numbers and the other house price index, well, they come out half an hour later. You've got a bit of breathing space, but just be aware, we could get if we get the situation where we get higher Canadian inflation numbers and weaker, say, US durable goods numbers, well, then that's a like not necessarily a mismatch. That's a match up for a much bigger move on dollar CAD, right? Then you come into we come into Wednesday's trading, the GfK consumer confidence numbers out of Germany, and I'm always watching these sort of numbers. And then you come back down, you get the Swiss National Bank quarterly bulletin. I don't know if we're going to see much out of that, but you come into the end of Wednesday. Powell is back on the podium there, having a bit of a what's for. And then you come down through into Thursday. And this is some later in the week, right? This is where the Japanese numbers, I think, are well worth having a look at. See if there's any sort of flow-on effect from last week with retail sales and their inflation numbers. These numbers should be higher. If the inflation's higher, it's got to sort of piece it together and then just keep together. Like, as I keep saying, like the last week of the month, you do get a lot of central bankers speaking, but it's, you know, this is all part of the puzzle. Every month, it's the same routine. You've got the German inflation rate here coming into Thursday. The jobless numbers, okay, the initial jobless claims, which we have seen impacting US GDP growth, the final numbers, they're usually pretty close to the mark, but you want to be watching them in the pending home sales. And then you come into Friday and the Japanese numbers are back on the radar once again. As I said, the traders in the Asian session who have been probably starved of a lot of opportunities because most of them have been emanating from the US or Europe. This is where we start to see some activity. You got German retail sales figures and actually also the Chinese manufacturing numbers. This could be big for Asian equity markets. Okay, really weak numbers here. I think it's just tricky. I was going to say they're talking about higher rates across Asia, but weaker growth, right? As I said, it can get a little bit tough. And then through the tail end of Friday, I mean, we've got a heap of stuff coming out. The final GDP numbers out of UK, retail sales out of Switzerland, unemployment rates out of Germany, the key to the European unemployment and inflation numbers, CAD GDP, US core PCE price index. It's like they're just rolling off one after the other. This is a situation like we don't usually see where the second tier numbers are key to the actual the picture of a lot of these currencies, right? The good thing is we don't have like inflation or employment out, as in the core inflation numbers, because they can be often too big, and the liquidity issues around trading those is somewhat terrible. Okay, with these releases here, especially coming into Friday, these are all sort of second tier numbers that will have an impact, but not so explosive that you get blown off the map on the actual release of the data. And you're trying to manage your positions around liquidity issues. You're not going to have that so much. So this is a good trading week, right? And you come into the tail end of the week, you get the Michigan consumer expectations. There's also the Bank of Canada Business Outlook Survey. I don't know if that's coming out, but we'll keep an eye on it. So really, from Tuesday onwards, we have pretty good directional numbers coming out. And as I was just sort of saying, a lot of these numbers aren't hugely explosive. The Canadian inflation numbers, well, they can be. Okay, so just be aware of liquidity issues around that release. But outside of that, we've got numbers coming out where you'll get a second or third chance to get into positions if you see the technical setup matching. Okay, so that's one of the key things about connecting these global markets is just understanding how they connect. Okay, the equity markets, how the US equity markets impact the Asia Pacific markets and then the European markets, and what influence that can have on the major currency pairs. Okay, as I said, we've got a risk-on profile to start the week. Euro, sterling, Aussie, Kiwi up, the dollar down. And that's a nice one to look at. Commodity markets, well, I'll tell you what, they're sort of having a good start to the week. The yen crosses, keep an eye on those. And outside of that, when you do see opportunities, make sure you don't just rush in and you're thinking, oh, I love the price action. Ideally, you want to be matching up trading situations where the technical side of things really comes into play. Okay, like that's a clean snap through the dollar index, obviously lines up perfectly with euro, and obviously understanding that the euro is 58% of the dollar index, you know you're going to get, if one moves, the other one moves the other way, right? The sterling, bit of a bash up week last week, like tough markets, right? Really tough. We had crazy CPI, the PPI was weak. I mean, everything there on sterling that was discombobulating, we want to sort of get it to settle down because there are going to be great trading opportunities on sterling. Aussie's got a downward bias, right? You've got to understand that's the general direction for the Aussie at the moment. Dollar CAD, well, a little bit loose and a little bit tricky. You need to be recalibrating your support and resistance trend lines to where the current market is, right? It's just a simple process of really isolating the key points where these instruments will be, you'll see swift changes in momentum, right? And even dollar Swiss there sort of snapped through that top line. We've got the start of a new trend line here on the bottom, and something to piece together as we start the trading week once again. This is a fresh week, fresh opportunities, and we need to sort of be ready to attack them. And that's where you need to come back through and just adjust your trend lines accordingly. Okay. Now, I was just going to say I'm just going to start adding, like building the sort of the community side of the training back together. I'm going to be sort of presenting a few different things during the week, like maybe a coach's corner sort of set up, say come Wednesday, really focusing on trade setups and the best trading opportunities, and also incorporating some interviews with other traders who potentially have different trading styles, but then you'll be able to see how they are executing and what their decision-making process is. And that may well work for yourself because you know what? We've all got different risk profiles, different risk appetites, and this is a global market, so we're in different time zones. So people have different perspectives on the behavior of different instruments. And I want to sort of get that across so you can, so you understand there's more than one way to trade. Now, what we train is how to trade the global markets, but then you can bring in your own personal characteristics to really fine tune your trading process and really isolate the best trading instruments for you, right? That's where we want to get back to. All right, guys, that's the plan for the week ahead. As I said, there's no need to rush in here, right? There's so many opportunities coming up. Look for the opportunities. Don't chase the big ticket items. They can often be crazy, right? As far as liquidity, we saw that on sterling last week. Pinpoint the best instruments for you, right? Don't necessarily chase everything. Get your charts lined up, and then we can start to piece together where the best trading opportunities are. All right. And that's pretty much it, guys. The key to this, just keeping it real, keeping it all understood. Get yourself set up so you can see very clearly what's happening across, say, the currencies, equity markets, majors, commodities, and then also the treasuries down the bottom there. All right, guys, have a good week. All the best. Cheerio.